Hello everybody, a very warm welcome to the SD Capital's fourth session on our official YouTube channel. It's a bright day outside. It's actually a very bright Sunday outside, but we are still all at home. COVID-19 is still going on and we are all under lockdown. More than 1/3 or probably very close to half of world population is still living under lockdown. So here we are. But I would like to re-emphasize one thing here. As we said in our first session, this is the right time to start investing in the equity market if you haven't done so already. There is always a silver lining to a dark cloud, and here it is. You can always contact us at mail.sdcapital@gmail.com. Our Facebook page link will be provided just below this video. And today's session, yes, there will be a free stock recommendation. As we said, there will be 2 free stock recommendations every month, and this is almost end of April, and today will be our first free recommendation. Today's topic, what is COVID-19 causing to different industries? What is the impact? We will briefly touch upon some of the industries most heavily impacted by COVID-19 situation. The first industry we will briefly touch upon is the airlines industry. International travel has stopped. Domestic travel is almost stopped in most of the countries, and hence airlines industry is completely struggling. They are under enormous pressure. They are struggling to pay their employees. All their fleet is grounded and they are having a hard time servicing their debts. As the jet fuel demand has gone down along with all other fuel demands, oil and gas sector is also reeling under pressure. It's only last week we saw West Texas crude US shale oil price go into the negative territory, minus $43. That's not a spot price, but that's a future price. The mechanism is slightly different, but still it is a fair indication of the demand situation. People are actually paying to sell their oil. How bad that is. There are other industries which are actually winning in this situation. People are working from home whenever, wherever possible. And who is benefiting? The companies behind the audio conferencing and video conference tools like Teams, Webex, and all others. Yeah, Zoom had a bad day, a bad situation, but other tools, they are hugely popular. They are savior at this point. So the companies behind them are making huge profit. What else? All this net traffic has changed, all the user traffic. When I am talking to someone sitting in India, this whole thing is going actually via a circuit, some kind of a network circuit. So the telecom companies, they are big winners today. Telecom companies like AT&T, Vodafone, Sprint, they are making huge money. So even in COVID-19 situation, there are losers and winners. Now it is your choice if you want to take that decision which makes you a winner going down the line. But today's session, we are going to look at a particular industry in more depth, and that is the hospitality sector. Hospitality sector means restaurants, pubs, hotels. So firstly, let us make a note of the situation that business travel has significantly gone down in recent past. Again, thanks to these audio conferencing, video conferencing tools. You don't have to travel to talk to people. You don't have to travel to meet people. You can do majority of your work sitting at your desk and using tools like Teams or Webex. COVID-19 situation and the resulting recession is going to reduce people's disposable income. What does that mean? Leisure travel will also go down. So for the hotels, it is a bad news on top of a bad news. Leisure travel, business travel, both on decline. Then when they start operating after the lockdown, they have to maintain by the social distancing rules. They have to be very strict about their hygiene, and that will cause their cost to go up. So demand less, cost go up. What does that mean? The overall picture is really bleak, but let's see. The other thing is restaurants and pubs. The social distancing mandate means people will be really worried to go to restaurants and pubs. People will not be keen for social gatherings. but we can all see home delivery is growing. Some restaurants who never home delivered have started delivering, and sometimes they are doing it on their own. Sometimes they are partnering with companies like Zomato, Uber Eats, or other companies, Deliveroo, and there are many others. So what does it mean? The restaurants or pubs, there was actually a news, Guinness on the Wheels, that is a business in Ireland. Guinness company started. They started something like ice cream trucks. If you make a purchase of Guinness beer, they will deliver that Guinness beer to your doorstep, contactless delivery. So people are thinking. So as just like hotels, restaurants and pubs are also under pressure, but many of them are finding a way out. I can very well predict that companies like Zomato, Deliveroo, or Uber Eats is going to have a gala day going forward. There will be probably more players in that particular sector. More restaurants will start home delivery, more pubs will start home delivery. Maybe companies like Guinness or other alcoholic beverage manufacturing companies, they will start home delivering. So this is something which will grow. Apart from that, I can very well forecast that there are enough brains in the hospitality sector to come up with innovative ideas and to save the day. So for this sector, I will say wait and watch. There will be very interesting things unfolding over the months and years, because obviously, as I said, there are enough brains in that sector. Now coming back to our recommendation, but before that, I would like to remind you one thing. As we said all along, SD Capital is a portfolio management company who doesn't charge any annual fee whatsoever, and we work only on profit sharing basis. And I can very well also say that we are probably the only one portfolio management company who is ready to share the loss if their client make a loss. We are so confident about our research and processes that we are ready to share your loss if that happens at all. Coming back to the recommendation, our recommendation is at this point, Asian Paints is a buy. It's one of the large blue chip companies in Indian market. They have a very solid balance sheet. The balance sheet numbers tell you a very good story, and they have a business plan which makes us believe by 2022 they will be one of the largest players in that sector in whole of Asia Pacific. And hence our recommendation is please buy Asian Paints if that suits your investment strategy, your investment plan. Buy price, stop loss price will only be shared with our clients, SD Capital clients. But for all our YouTube subscriber, our recommendation is you do your research. If this aligns with your portfolio, your financial goals, please buy the share of Asian Paints. You can send all your query to mail.sdcapital@gmail.com. We will meet you again in 15 days time. So long, please stay safe, stay home if lockdown goes on, stay corona free. Take care. Thanks. Bye.